Nova Health is a provider of in-home care services in Canada and the USA. The company just reported a solid Q3 quarter, and CEO Chris Dobbin is here to give us some details. I'm Martin Gagel with Market Radius Research. It's Thursday, November the 14th. Please remember this is neither recommendation nor investment advice. Chris, good to see you again. Congrats on another solid quarter. How's it going?
Thanks, Martin. Appreciate you having me again. Always great to chat. Things have been going well, so looking forward to the conversation.
All right. Well, why don't you just give us a quick overview on the quarter, some high-level numbers, sort of how it falls into your prior performance in that.
Yeah, look, this has been another steady quarter for us. I mean, we've been a bit of a model of consistency. I think those are the words I may have actually used in my CEO comments. Revenue was it was up slightly versus the quarter before, but I mean nothing really to write home about. I think it was up 1.1%. EBITDA was very consistent with previous quarters. We've been in this range of this around $400,000 per quarter. The last 12 months, we've been trailing at about 1.7 million US, which is of adjusted EBITDA. So in Canadian dollars, that'd be about 2.4 million. Given the 140 exchange rate today. So, pretty consistent growth margins, pretty consistent revenue, pretty consistent EBITDA. So, things should change going forward. Obviously, we've made a couple of acquisition announcements that are forthcoming, but all in all, it was a very consistent quarter.
And just to remind viewers and investors that you report in US dollars, your stock trades in Canadian dollars. So there you gotta when doing multiples in that, you gotta do some conversion there. Otherwise, you're not seeing the whole picture.
Yeah, I mean, we trade on TSX, obviously, and we also trade on the OTC in the best market down there. So people can certainly buy our stock in US dollars through the OTC. But we do report in US dollars because of the bulk of our operations are in US dollars in the States. I think people sometimes lose track of that, but given your audience, I'm sure it has to do with both US and Canadian audience. I try to mix it up a bit. So again, on a trailing 12 months basis for EBITDA, we're about 1.7 million US, which is again about 2.4 million dollars Canadian.
You mentioned the quarterly a little bit up from the prior quarter. What does seasonality look like in your business? I've asked this before, but let's just a quick reminder on how the quarterly cycle of revenue goes. I know when people go on Christmas vacation or summer vacation or whatever other seasonal factors affect matters.
Not a lot. I mean, there may be at certain times of the year, like a Thanksgiving or something, when the adult children come home, and maybe we don't have the same service level requirement as we would when they're away or where they live in a different city. Or Christmas time. I mean, there would be certain things like that that might have a little bit of seasonality, but those aren't. I wouldn't call those material impacts. They happen, but they're not. You don't see a huge impact or a big swing in our financial results from quarter to quarter. At the end of the day, people need help within their home, and regardless of the season that it happens, what we do. So we don't look at our business as sort of a cyclical or seasonal business at all.
You were very busy on the acquisition front. You announced a couple of definitive agreements in the past in the quarter. Why don't you tell us a bit about those?
Yeah, so we did make two announcements. So this would be the second and third acquisition announcements that we've made for 2024. The first one was a smaller transaction that we closed in Massachusetts back in May. So we've announced one in Florida. So this will be our first foray into the state of Florida. We're just waiting for state approval on that right now. And so as soon as we get that, we'll be in a position to close. We've looked at the state of Florida over the years. We wanted to enter into that state a few times before, and it hasn't quite panned out. So this is the first acquisition that we'll be making there. So good business, good management team. We really like it. We've looked at this business over the years, and so this was sort of the right point in time for us to get. And so again, looking forward to that as soon as we get the state approval. And the second one is both of these are related party transactions. So I should state that. So the first one in Florida, we're actually acquiring the business from one of our directors. So again, this has all been press released, so it's not this shouldn't be new for people that are reading the press releases. And the second business is in Nova Scotia. So this is actually my wife and I own this business, and we've owned this business for a number of years. So again, another related party transaction. And so this is the business that kind of started it all. This is the one that we had bought privately back in 2015 in Nova Scotia. And through our experience with that business, had decided to start the publicly traded company, which has resulted in us acquiring a number of businesses, elsewhere in Nova Scotia as well as in the States. So again, two related party transactions that are happening, both requiring some level of shareholder approval, different types of shareholder approval that are happening right now, but those are the two transactions that we've recently announced.
What can you tell investors, given related party transactions there are with other companies, and that sometimes some shady dealings, and like how do you pin down a valuation on that? What kind of process did you go through to make shareholders comfortable that this is a good acquisition? I presume you're happy with management, especially in the Nova Scotia operations, but that it is a fair valuation, and that it was good for both parties.
Yeah, I mean, look, the numbers have been put out in the press releases, and anybody can sort of see that they're very consistent with how we've purchased other businesses. And so I think that provides a lot of credibility and comfort to shareholders that these are the type of transactions that we would want to do, because again, they're very, very consistent with how we buy their businesses. There's no real differentiation there. As a matter of fact, we've paid more for other businesses than we have for these two that have been announced. I'll speak to the Florida-based one because I was involved directly in that. Again, like we went through the same due diligence process that we always do. We had the same conversations with management that we always do. We met with the folks that are running the business in Florida. Same valuation process, same due diligence, same legal team. And so again, everything was very consistent with how we would treat another business, and the valuations, again, anybody can sort of look at the press releases and get comfort that they're very consistent. I'm not I can't speak on behalf of Nova Leap relative to the business that they're acquiring in Nova Scotia, because that's our private business. I was not involved in that process from the Nova Leap perspective. But again, I think anyone that would look at the press release that's been put out there can see that the manner in which Nova Leap is paying is very consistent with how other business has been acquired. So I think anyone can get a lot of comfort around the valuations pretty quickly.
All right. And with these businesses being acquired within the greater mothership of Nova Leap Health, does that give them, I don't know, additional resources to grow or increase profitability within Nova Leap?
Yeah, if we didn't think we could increase profitability, we wouldn't be doing the deals. So absolutely. So we tend to look at when we're looking at making acquisitions or any sort of growth initiatives we have in the company, we tend to look at it from two lenses. Is it in the best long-term interest of the company? So is it in the best long-term interest of Nova Leap? And what's going to be the impact on a long-term per share price? And that's often the lens in which we look at it. And so these are two deals that obviously the board feels is very compelling opportunities for Nova Leap, because we're going to increase the metrics that we look at. And so that's why those deals are being done in particular. And when we look at other deals going forward, we look at it through that same lens, right? Is this going to advance what we're trying to accomplish for the company? And if we feel that it'll advance the company, then we'll do the deal. And if we don't think it'll advance the company, then we won't. And so oftentimes it comes down to sort of a math equation, but that's kind of how we look at things.
Especially compared to the one you did earlier in the year, they're not huge, but they're on the larger side of your acquisitions.
Yeah, we buy really small businesses. The one that we bought in Massachusetts, like that was tiny. I mean, I think it was 800 and some odd thousand of revenue. It was $100,000 EBITDA. So yes, these businesses are a little bit bigger. I think Nova Scotia was around 2.3 million, if I remember, and I think the Florida-based one is just over 3 million. So from a revenue perspective, so again, very small businesses of themselves, but industry average for a home care business is right around $2 million of revenue. So these two are slightly bigger than the industry average, but yeah, we buy sort of these mom and pop independent small home care agencies. We love those types of deals, and those are the types of deals we want to do going forward.
You have to digest them both financially and you add value to them. Does this put and I know it was a few years ago now, you in the fourth quarter you did a whole slew of deals. Does this put a pause on your acquisitions for a couple quarters as you digest them both financially and operationally, or are you still have, let's say, dry powder, as they say?
Yeah, so I think you're referring back to December 2021. We had actually closed 3 acquisitions over a 2-week period. So in
Yeah.
December, it was like Friday, 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 actually in 3 different states at that time. So that was a busy time for us, and then we sort of put a pause on acquisitions for some period of time. So fortunately, we have a very strong balance sheet. So we're sitting with about 1.3 million US of cash, and today we don't have any bank debt. Now, what we've indicated in our announcements is that we will start to leverage up our balance sheet with these 2 acquisitions. So in US dollars, it'd be roughly $1 million of debt for the Canadian operation, and then it'd be 1.3 plus the promissory notes for the Florida-based business. So put that in perspective, that'd be about $2.3 million US of debt, and we're trending at about $1.7 million of adjusted EBITDA. So it kind of gives you a sense that we're still very much at a very comfortable ratio. As a management team, we're willing to go up to 3 times as a max. So from a debt to EBITDA perspective.
And
So
just to clarify, you're roughly at 2-ish here with these acquisitions?
no, we're going to have about 2.3 of bank debt. So call it total debt will be about 2.7, but we're
Okay.
$1.7 million of adjusted EBITDA. So we're not even at 2 times. No.
Okay.
Yeah.
All right.
Yeah.
All right.
So very comfortable debt. Like we're very comfortable with the amount of debt that we have relative to the cash flow we're producing. And so yes, we do. To answer your question originally, yes, we still have some dry powder relative to our leverage capability.
Yeah.
And so we're still looking at other businesses, and kind of we'll see where those conversations lead. But we always tend to have conversations that are on the go with different owners, and sometimes it lead to opportunities as these 2 have, and sometimes it could be conversation now, it leads to an opportunity 3 years down the road. Just really never know where the conversation is going to go.
You've now entered the Florida market. Florida is known as, I don't know, the retirement state or one of the retirement states, but it's also one of the fastest and most dynamic economies in the US. Does that, I don't know, are there any special dynamics or circumstances of the Florida market itself that are particularly attractive?
Well, certainly it's a Sunbelt state, and so you have a lot of the demographics that are sort of within our service base. So we think it's obviously a growing state, growing market, and so that just presents opportunities for us in the coming years. And so to us, when we enter into a state, we're thinking about the long term, right? What are we going to do over the course of the next decade? And so we would never just enter into a state just for one location. Like we see this as a multiple location state in the coming years. And so that's what we're most excited about. So we'll start with one location, which is on the Gulf side. And we have plans to expand that north, certainly over the course of the next couple of years. So we're pretty excited about the state. Lots of opportunities for us to grow. It is a competitive state, lots of other players down there, but we think we have a great management team that will allow us to sort of accelerate what we want to do in that particular state.
Everyone's talking about the election nowadays. Are there any aspects of the election that impact your, obviously no one's new in power yet, but anything either on demand, supply of labor, or any other issues that could affect the business?
I mean, we've been through election cycles in the past, and I can't say there's been any sort of direct impact on labor supply or sort of how we operate the businesses. COVID obviously was a very different sort of time, and that certainly had an impact on us. But we're not in the Medicare space, we're not in the Medicaid space. Those tend to be more areas that are impacted by political parties and how they view things. But we're in a private pay space, so we don't really see anything directly impacting us. Obviously, interest rates have an impact on the economy, unemployment rates have an impact on the economy, and just availability of the labor pool. It's possible that immigration policies could have an impact. But, like we already look at those things. So it's, again, hard to know what could have an immediate impact on our business. But, you're either in business or you're not. And so you deal with
Yeah.
the realities at the time, and you manage accordingly. And that's kind of the way we look at things.
Chris, I think we've covered the main topics of the quarter, a busy quarter for you guys. Anything else you want to add that we maybe missed, or just to wrap things up before we call it a day?
Look, I think it's an easy business to understand. I think most reviewers will get it, and I appreciate the time and the opportunity to chat and keep an eye on us. And people like what they see, then great. And if they don't, then there's lots of other companies out there. But regardless, we'll continue on the trend that we are. And again, I always appreciate the opportunity to share our results with your audience.
Chris, thank you for taking the time to chat. Have a good Q4, and we'll talk again, I guess, in the new year. Thanks a lot.
Thanks, Martin. Appreciate it.